Hey, this is Sasha Evdokov. Welcome to episode number 79 of Let's Talk Stocks. And in this episode, I'd like to share with you a method to find which stocks are strong during a down market. Now, you can use this method in the inverse, meaning you can see which stocks are weak in an up market. You can also use it to find which stocks are strong during a down market. Now, today we've had a down market. Obviously, the Dow Jones here, if we take a look at the Dow Jones, was down 170 points. We're coming into these highs over here of about 18,000 on the Dow, so a pullback since bouncing off right around this 15,720 level is pretty extended. And if we look at the S&P, I have a few different levels that I'm watching on the S&P, but coming up to right around that range of about 2,100. As we get into that range, we're getting into the overextended range from where we bounced over in February. So if you take a look at that right there at about 1850, right around 1890 level, now we're watching this 2000 level. As far as the short-term support, I was watching this level right here for the lows of... Here we had 2040 and also 2050. So we broke that. Can we come back a little bit to the 2000 and bounce? Absolutely. Can we simply bounce tomorrow just because we had an oversold level? Yeah, we could. Right now, if you look at the SPY, the volume is starting to pick up a little bit. We did have more trading action today than the previous day where we had the bounce. And you have to look at this also on the IWM. As you see it, we have slightly a little bit more volume. We got 32.4 million versus 28.1 million to the upside the previous day. So we could have a couple of more down days on weakness. And also looking at the rut right here, we had some issues coming into this level right here. We couldn't get through it. So obviously what's going to happen if they can't go higher, they're going to break them lower. So when looking at this, you start to wonder, okay, which stocks are strong or which stocks have been beaten up the most? And depending on the type of trader that you are, if you're trading and you're looking to bottom fish or you're looking to see which stocks have the massive weakness, so there's a couple ways to approach it. You could look at it and say which stocks are acting the weakest because I want to short those stocks when we get a little bounce. So this is what planning allows you to do. You're looking at this market, and this is what you're watching during this market because it's a method to find which stocks are strong during a down market or vice versa, which stocks are acting weak during a down market or an up market. So you could do this also in an up market as well. In either case, the way that I use this is I look at it when you have a big day, a big up day or a big down day. It doesn't matter which direction, but you see which stocks are leading and which stocks are not leading, which stocks are in the background kind of dangling around there, hanging out over there, and not really doing much because that means they don't have that much fuel. So the way I look at these days is I like having large day moves either to the upside or the downside because it also shows me which stocks are strong and which stocks are weak. So to give you an example, let's look at today. Today's action, if you look at the S&P, we have a pretty serious drop. If you look at the Dow Jones, also fairly serious drop. If you look at the composite, which typically leads the market, also a fairly large drop. So we can all agree that we've had a fairly large and major drop in the markets. Now, the way that I like to do this and look at it is if I'm on a down day, what I'll do is I can sort some of the stocks, and I'm just going to use this list of my top favorite stocks, the more popular companies for the time being. So I'm going to sort it by percent change. I'm not sorting it by the net change. I'm sorting it by the percentage change, how much these stocks are moving to the upside, or I could sort it to the downside. So I could do it the other way. Now, if you have a different panel trading platform, that's perfectly fine. You can use that trading platform. I'm sure they have a percent change in that platform. So you take your list, whether that's your whole Russell 3000, if you go into the whole index and you go into, let's say, the Russell 3000 components, now you get a 3,000 stocks. So what you want to do is sort it. So now you're sorting it based on the price action of the percentage. The reason you do it by the percentage is because a $27 stock that's moving 17% down is a much more significant move than if you're looking on it on a dollar by dollar basis, because a $100 stock can move $2 on a given day without a problem, but a $27 stock moving $2 or $3 is much more significant because it's a larger percentage to that company. So you're looking at a percentage related gains, and this is one of the reasons why on the news TV they talk about percentages, is because it's relative to the company. It's more closely directly related. Now, when you look at this and I start sorting things, I start looking at, you can do it two ways. You can, if you're looking for stocks to the upside, if you're ready to buy stocks to the upside, you're looking at which stocks exploded today and that are actually green, because this tells you there's buyers. So when I do this on a Russell 3000 components, and you can do this also on the common stocks. So if you go to U.S. common stocks, you could do it on this as well, but this will also get you these 50-cent stocks, which are not really as useful. So if you use like the Russell, it might be a little bit more safer, or the S&P 500 index. If you want to do it on the S&P, you can also do it on the S&P 500 stocks as well. So in either case, if you look at it on the S&P 500, I'm looking at this list and I start seeing, okay, which stocks moved the most today? And the first one really that popped my eye was Win. And we've talked about this in the members section for the critical charts. I talked about this sideways consolidation pattern there for quite a while, and then we broke out of that. And you can see that we continue moving higher, and we got upgraded on this stock, and we have large volume. So we have support right here. So this stock just continues to power higher. Now, I believe it's getting a little far extended, especially as we come into this range and level right here. This 100 level century mark is typically a area of resistance. So you want to be really careful. But here, when I'm looking at this, I see, wow, okay, this stock has buyers. So does that mean I jump into it right away? No, not necessarily. I could tomorrow, if we had, let's say, a massive buying day, I could add to this position. But the better approach is to take note and see which stocks are acting strong, because these stocks will also have a pullback soon. And when they have a pullback, let's just say this stock pulls back to 90, and let's say we have 3 or 4 days of down markets and the stock comes back to 90, and then the market turns around and then we have another week of popping action. That would be your time as it bounces at this 90 level to get into that stock, because this already confirms and tells you that it's strong. Even on a major down market, this tells you it's quite strong. Now, you do have to look at this from a larger viewpoint, meaning that we're looking at it that it's already slightly extended. And that's why you wait for that pullback. You wait for it to come back a little bit. And on a few down days, like we had over here, 3 or 4 days of down day action, you get into that stock and you hold on to it, and boom, you get your bounce. The same thing when it happened over here when we were in March 8th, March 7th, March 6th. We had a few days of down action in the stock, and then eventually powered higher. So you're waiting for those red days. You're a contrarian. You do things that are opposite of what most people think, because this is how this business works. Okay. Then if you look at some other stocks, you can look at, other stocks in the same way. You start looking at this, and now you start saying, okay, well, this stock was also on an up day. Then you start looking at the other things. Okay. With Win, it was pretty simple. And the reason why I say it was pretty simple is because we had consolidation pattern. The stock was selling off for many months, actually a couple of years, and was starting to get some trend reversal after a digestion pattern. But with another stock like this, SWN, this is the next one that's been higher. And you can see the difference between Win. We had 11% change, whereas this one is 4%. Still quite a bit. So I'm looking and I'm evaluating, okay, so okay, we have a downtrend. Here we have an A to B, B to C, and then a C to D action. So now, are we in a consolidation period, or are we on a popping action? But this one still catches my eye. So that means, okay, so now let's say you like this stock. And I'm not saying I like this stock. I'm not recommending it. I'm simply saying, let's say this one looks good to you. It's at a lower level and volume is picking up right here over the last couple of days. You can see volume is picking up today. Comparing it to the last 2 days, we had a little bit of a lighter volume, and we're getting some buying action on a red day, on a pretty serious down day. So now what do? Okay, I look for my potential entry point. And where would that be? Well, the safer place would be right here at these highs where we were hitting this resistance level. And that resistance level was right around 962 on the highs over in January 28th. Then we had another one February 8th, 990. So let's say you're waiting for the $10 level. So now what you can do is, if the stock pulls back and you're looking for a bounce, you could do a purchase at somewhere around this range of 518, $5, 497, 565, right around that level. And then if you're looking for a bounce, because we know the stock is acting strong recently. Now, on the longer term picture, we had a lot of selling, so you do have to be cautious about that. But in this scenario, if you want the stock to prove itself, you could wait for that $10 to clear and then get in it at the 10, 10.15, 10.25, 10.38, 10.47, 10.65. You could get in it right around that level, and now it gives you some opportunity to power higher. So, but to me, when a stock is moving well on a down day, it tells me to check it out. It doesn't mean I need to jump in it, because now I have to look at the other things. Now I have to look at the pattern. I have to look at the volume. I have to look at the price action. And I have to look at, overall my time frames. I have to look at the weekly. I want to check out the monthly. How are things going? So over here, I'm also looking, okay, so we had a major resistance level over here. And we had some other, where's the next support level? Where's the next potential? What can it get to? Maybe it can get to about that level. So you're checking out all these different price ranges or levels, and then you start making your plan. So in this one, for example, we had a lot of selling that came in over the last couple of months and the last year. But here now, it's acting strong, and potentially, if it breaks this $10 level, 10.30, 10.50 level, it could be a nice purchase one, because you could see this stock moving higher if the pattern continues, if the trend continues, if volume continues, because it's acting strong. It's showing its hand right now because there's a sea of red. The problem with regular days, if you get a day that's kind of doesn't do much, where there's like a regular day where the markets barely move and you got half the stocks green, half the stocks red, it's a little difficult to figure out and pick certain stocks. But the thing is when you have a sea of red, when we have mostly just a handful of green stocks just right here between this range all the way to up here, we just have green. And then the rest of the stocks, as I start looking down on all of them, it's just a massive sea of red stocks. So a lot of stocks are selling off. They tell you something. They tell you a sign. They tell you a signal. So you can go to the next one. You can go, okay, so here's Cabot Oil and Gas Corp. We know that these oil companies have been beaten up lately. So I'm looking at it. Okay, here's the trend line resistance level. If I look at the A to B, B to C, C to D pattern, and now I'm watching these different levels, and I say, okay, let me look at this. This is interesting, because this stock is moving well on some volume. The volume here is not big, but some volume in a sea of red stocks. So then I look at it, okay, is it worth getting into? And sometimes you might say, I don't like it. Sometimes you might say, well, the volume isn't there. If the volume isn't there, if something isn't lining up, you say next. You go to the next one. Then you start evaluating this next stock. You check out the daily. You check out the weekly. You look at the volume. How's the volume acting? How were the past charts? And again, here's our, if we look at the weekly, here's our A to B, B to C, and C to D price action right there. And now are we in a digestive period? Are we looking to power higher? So for me in this situation, I see, okay, well, we're probably in a digestive period because looking at this overhead volume, overhead supply, this could be a problem. So then, okay, I say, nah, this one, I don't like it. I'll go to the next one. So you keep doing this and you start looking at it, but it tells you something. By looking at these stocks that are green on a major red day, it tells you something's happening. So here on this one looks a little interesting to me because we had a decline in volume over the last month when we look at this MPC. So as we look at MPC, the last 2 days, the previous day we had an up day. But then today, even though we had a major red day, we had even more volume than the previous day where more buyers are stepping in. So something tells me about this stock. It tells me that this stock has some action, has some buyers. It could be short covering as well. But in this situation, when you had this digestion period, it usually doesn't mean short covering, especially in such a down market. It just puts up this signal for you to say, hey, this one's one to pay attention. And you could nibble a few shares here and then add when it clears these next highs of about $39, $40. Okay, when it clears this price level of $40, then you could see maybe even higher prices. But you could nibble a little bit because it shows you strength is coming. Now, you do have to be careful if you're doing this. This doesn't mean you get into these stocks right away the next day. What this means is you wait patiently because the issue here, when you have a sea of red, when you look at an S&P, when you look at the Dow Jones, when you look at an IWM, when you look at the RUT, when you start looking at these things, they could roll over, especially, looking at all these different indices, QQQs, IWMs, RUTs, they could roll over. And if they do roll over, then you might see these stocks that are acting strong, the market can take them down with it. So you have to be really cautious that are you just in a standard pullback or are you in a heavy selling month or something to that effect, heavy selling quarter? Are you going to get a continued bearish action for the next couple of weeks, months, or is it going to be a year of bear market action? So typically, if you've had such a strong pop like this, and then you have 1 day of pullback, 1 day doesn't make a trend. 1 day, I always say 1 day doesn't make a trend. If you see 2 or 3 more days of heavy selling action that starts coming in, that's where you start seeing some trouble. Because with 1 day, you can take a look at any trend right here, any trend. You're going to find, even on a healthy uptrend that's very positive, you're going to find 1 or 2 red days in that move. So even here, if we look at this IWM over February to March period, we have, we're looking at about 26, 28 days. We still have 1, 2, 3, 4, 5 red days. It's not a lot, but we have 5 red days. If you look at a sideways action here, and you just take a sideways action here of IWM between January 14th and we go to February 5th, we have 1, 2, 3, 4, 5, 6, 7 green days, and 1, 2, 3, 4, 5, 6, 7, 8, 9 red days. Now, granted, this is coming off of a bearish move here, but still 7 to 9. You're moving sideways and you got about half and half. So that's why I say 1 day doesn't make a trend. Look at this moving average, how it's basically coming into a flat area. Okay, so hopefully this gives you a quick little insight about these stocks, and you want to go down the line of these positive stocks. If they're barely positive, then it's something to not really pay attention to because it's not as many buyers. It's a little bit of buyers, but it's not as significant. So for example, stock like McDonald's, a 50.51% move is pretty good for a stock. It's 65 cents, but for this stock, it's still pretty good. But for other stocks, if you look at it, and it might have been like a $300 stock, like a Tesla, a 65 cents is not significant. Now, you can do this same concept the other way around. If you have positive days, like majorly positive days, you can see which stocks are acting weak to see which ones you want to short. Or, this is a big or you can look at it, if you're in a negative day, you can also look at which stocks have heavy selling coming in if you're interested into shorting the stock, or if you want to short. Now, if you're new to shorting, if you're new to the markets, you don't want to short. But here on these big red days, I'm looking at a percentage loss, and what I can do is see, okay, which stocks are selling off the most. So what I could do is go down the list again. Whoa, look at the CarMax over here. This is a major engulfing pattern right here. And this wasn't even on my list to show, but look at what things show up. So this stock could be a major one to short right here, especially if it clears 47, 44, and we have continued action because we have huge selling coming in, huge action coming into this stock because it engulfed. We have an engulfing pattern on CarMax, KMX, and we had a sideways action. Stock tried to get above it, and major selling came in. So this right here points it out to you right there, and you could set up a plan. You watch the other charts. So here you have the daily. You'd set up your daily plan right here. This is the support level right around that range, and when it clears that, you could enter it short. You could get in it earlier if you wanted to, but if you wanted to play it safe, you could wait until this clears this level on volume and see for a second day follow through. Because sometimes you get counter trend bounces on heavy sell-offs like this. So you want to watch this and see if you get a little pop or a bounce tomorrow. But if you get a follow through, that would be the place right under that to go short if you're interested in shorting. Then what you do is you go to the next stock. You start looking, okay, what's the pattern looking like? Then you're watching to see how is the volume coming in right here. How is that volume picking up? Is that volume heavy or is it light? And in this case, you can see if we broke the pattern and we're breaking lower here on a heavy volume. So that's what you want to do. And you constantly just keep going and running through these stocks and looking and evaluating these things. So here again, here's the support line right there. We got a gap under here, which gaps typically fill. We're starting to get into this region right here where the support level is. And if we break that, the gap will start getting filled. And volume, of course, is picking up as well. So you start looking at this and evaluating it. Okay, how is it moving? How is it reacting? Okay, did it come into previous resistance levels, which here in this stock, Urban, it did. How are the fib levels? So if I take this all the way down to here, look at that, how that lines up right there at the 50% retracement. Okay, so that's what you're doing. That's what you're watching. And it tells you which stocks are strong or which stocks are weak. And that way you can set a plan for shorting, for going long, for seeing things. But that doesn't mean you do it right away. Yeah, sometimes you wait a day or two or a couple days, but it gives you a signal to see about the stocks. So if we look at our current market, just quick rundown. Apple right here pulling back. Watch this support level right here, right around the 107 level. That's what you want to watch. If we break this, we could see lower prices because it affects the Dow and some other indices pretty heavily. Here's AMTD, Ameritrade, breaking, heavier volume, picking up. There's that support line, boom, breaking, moving lower. Amazon, we're holding up fine on Amazon right here. We are picking up a little bit of bearish volume action, but we did hold up pretty well right here just due to the Kindle announcement there the other day. So I would watch this line or level, and then if it breaks that, watch this line or level. If it comes back down here within the next couple of weeks, this could be a buying opportunity, but you do have earnings around the corner, so you do want to be careful around earnings and get rid of that position before earnings. Then we have CMG starting to break below this little support line as well, which means on volume, you could see this stock come back to the 405, which is another 50 points. You also have Facebook holding this level. If it breaks this level, You could see lower prices coming back to 104 or right around 96. Just depends how much action we'll get, because we're still consolidating. I mean, it's just we're still holding up. It's 1 day sell-off for now. First Solar, here's the resistance level coming back. Here's an upward trend line right there as well. And if you look at today, we do have some volume on the pullback. We did have yesterday a little pop on some good volume, but really we broke the support line on the trend, so the stock is acting weak. We're at the highs. Remember, rubber band effect. Which ones are overextended? Goldman Sachs, major sell-off. If you look at the ABCD pattern, here's the A to B, B to C, C to D, and then we repeat this process again, A to B, B to C, and you may see another C to D, which right now we're starting to break this. If you look at the daily, we're starting to break this, which could create a C to D pattern. And that could be problematic for the stock, which would take it to, let's see, approximately 60 points from there. Let's see. 60 points from that range, you would probably see that stock coming back to about 100. But we'll see. We'll see. Time will tell. It may not get there. Just depends on how big the sell-off is and earnings are around the corner. We got Harley-Davidson also right here, upward support line selling off. You could see the stock coming back to this price level, which really comes over to here. And if you look at the monthly, that's really where that level is. It's really right there. Then we have McDonald's. We talked about powering higher, still continuing to move well since breaking these patterns. We've talked about this in the critical charts before. Definitely take profits in the strength on these. Ride them until you can't ride them until they stop moving, but take half off and then let the other half ride. This is what you do. Price line, you're watching, it's coming into this support range. If it can't hold here, watch out below. We do have this gap right here that will and may get filled if we break that level. Then we have Sherwin-Williams right here trying to pop a little bit. We got a little bit of positive volume action. If you look at the weekly, you can see it's coming into those multi-year highs on Sherwin-Williams right around that 290, 292 level. So I wouldn't jump into this one right away because of just the market, but you could see tomorrow's action, and this could be a positive one if the timing is correct, and if you see the follow-through day. You want to see a follow-through day, because sometimes these stocks pop higher, go higher another little day, or isolate and then roll back over. Okay, so they play around in that range. They fake you out. Tesla's getting into the overbought area, a little overextended, especially as we get into this 286, 290 level. So this stock's had a monster run since this 140 level. I mean, basically 100 points in just about 1.8 months. So we had a monster move. Win, we've talked about, and ExxonMobil. ExxonMobil coming into this resistance level. You might see it come back to the 71 level and potentially bounce there. But oil stocks have been hit a little bit hard. I wouldn't be surprised if it just hangs out a little bit here, and maybe just a slight pullback, if anything, because they're attempting to move a little bit higher, because these stocks have been hammered. These oil companies have been hammered, so they are acting a little more fair valued because they've been sold off quite heavily over the last year or so. So anyways, that's my little tidbit for you for learning, watching, and seeing how stocks move, react during down markets. And if you spot the positive ones or look at the very extended ones, it gives you some insight on what you can do and what you can play with when you're looking for the short side or when you're looking for the long side. But that doesn't mean you have to jump into them right away tomorrow when the market opens. So be patient, allow things to digest. Sometimes give it an extra couple of days, 2-3 days, because those stocks, when they're strong, they're still strong 2-3 days from now. Just you want to confirm it, validate your analysis, validate your theory, and then make a clear plan and execute. All right, so I hope you enjoyed this little lesson. Next week, I have a really nice presentation for you. I've pre-filmed it. It's actually about a lot of the negativity that goes on in the markets and just shed some light for you. Maybe show you the bigger picture behind the trading business and really what it's all about, and just some of the nasty things that go on in this industry to open up your eyes, to wake you up and give you some awareness. So that's kind of the plan, and that's the goal for next week. So thanks again for joining me. Hope you enjoy your week so far. Enjoy the trading week. Enjoy the time with the family. Make it a great one. Do what you love. Contribute to others. But most importantly, live life abundantly. And I'll see you next week.